escucha? ¿Sí? Bien, ¿cómo están? Oye, pues antes que nada, les queremos dar a todos las gracias por haber venido y compartirnos su tiempo. Lo que nosotros tratamos de buscar en Kapital, en realidad, es que nuestro producto hable por sí mismo. No solo te damos una solución digital, no solo te damos una tarjeta de crédito, la traigo por acá, siempre va conmigo a todas partes, aquí está. No es mi es que nosotros queremos ir más allá. Esa es la realidad. Y por eso les abrimos todo lo que nosotros tenemos, nuestra casa, nuestra solución, nuestros inversionistas, que ahorita lo voy a say in English, sorry guys, just giving an idea in Spanish. Nuestros inversionistas, nuestro know-how, nuestra comunidad, y queremos darle las gracias, es nuestra llegada a este hermoso país que tienen, hermano de México. Tenemos los mismos valores, las mismas creencias, todos somos católicos, todos nos persignamos, así que dicen que si llueves de buena suerte, no sé si esto también sea aquí también, pero aquí llueve todos los días, bendito Colombia, no, de verdad muchísimas gracias, y disfruten, aprovechen este espacio, muchos emprendedores que veo acá de la comunidad de Rockstart, pongan mucha atención a lo que están diciendo ellos, que es liderado por Felipe, que batalla mucho y le echa muchas ganas, lo veo con todo lo que hace con su ecosistema y cómo los impulsa. Va a estar acá con nosotros, déjame platicarles un poquito, Grahme de Ninja Partners, nuestro co-founder Fer, y nuestro socio y CFO, Jeff, partner de Broom Ventures, Felipe creo que no necesita introducción al ecosistema fuerte, y Taylor, de Tenacity. Y al final voy a dar una pequeña charla aquí en este mismo lugar con Arash Ferdosi, que está aquí abajo con nosotros, que es el fundador de Dropbox, para que platiquen también con él, nos hagan preguntas. Es muy importante que aprovechen este espacio para preguntar todo lo que piensen, lo que opinan y lo que viene, para que su journey, que siga, se acuerden de este momento y lo aprovechen. Entonces, pues chicos, muchas gracias. Los dejo en buenas manos. Guys, welcome. Thank you. Appreciate your time. And hope you guys enjoy it. And bye-bye. Perdón, no me regañen. Yo soy el que regaña.
Ahora sí, hola. Ahora sí vamos a hacer el cambio a inglés para empezar el panel. And thank you very much for being with us today. So, once again, welcome to Kapital House, the house of the entrepreneurship in Colombia. When Kapital told us that they're gonna do this panel, we were very excited because we think that it's very important to have some hard conversations and do hard questions and be with the guys who's behind that kind of questions. So when they told us that they're gonna do this kind of panel, we were honored to be part of it. For the ones who don't know who I am when I'm speaking, Andrés Montenegro, I'm the leader of Special Editions at Forbes Colombia. And this panel, we're going to do a lookout about what's happening in Latin American entrepreneurship with the guys that making the news about this. Some of you already been in Forbes, and some of you will be in Forbes soon, so keep in touch. So I think that, do you want to make another introduction, everyone, or you're good with the previous introduction?
I'm good.
Okay, everyone knows already who's speaking, or you want to be, once again knowing the names? Yeah. So just to the ones that are arriving right now and didn't hear, we're here with Taylor Oliver, partner in Tenacity Ventures. They have been in both sides of the table, from the view of the founders and the investors. So they really understand what is needed in each stage. Grahme Taylor, partner in Ninja Partners, they provide flexible capital to companies from seed to grow, like Series C+, and have be part of angel investors in many companies right now. Felipe Santamaría, co-founder of Rockstart, they invest in early stage startups while paving the way for chance-minded entrepreneurs in emerging technologies. Jeff Rosen, partner in Broom Ventures, who envision the world where empathic, mission-oriented founders win and help early-stage companies achieve their full potential. And Fernando, with CFO and co-founder of Kapital. Just we already know what's Kapital, but he innovates spirit and passion for business and technology, who enjoys implementing changing projects by fulfilling its vision and strategy. Better? Hola. ¿Se oye mejor? Perfect.
Con ganas, venga.
So, ahí, más pegado, ahí, más pegado, más, ahí. Ahí, ¿se oye mejor? Okay, switching to English again. Sorry about that. I was speaking very slowly, like whispering, and very quickly. I'm sorry about it. So let's dive into the conversation. And the first question that I want to make is about the current context and how the region is perceiving for VC companies, for example, from the Bay Area. So the first question is, what is your perspective about entrepreneurship in Latin America? Who's gonna be the first one?
I'll start us off. Thanks for having us, by the way, Fernando. But I think we made our first investment in LatAm in Kapital and have been thrilled to partner with these guys. They've been amazing partners, and it's opened up our eyes to investing in hopefully a lot more companies in LatAm. It seems like dollars go farther, entrepreneurs are super passionate, and there's huge untapped markets that have previously been overlooked. And so I think there's a huge opportunity from our perspective.
Yeah, I can put it this way. At Broom Ventures, we invest in people above anything. Specifically, we focus on what we call TLC, teams, leadership, and culture. We think that if you have that in an early stage company, you're on the right path. And if you don't have that, then even if your metrics may be good in the short term, it's not going to make it in the long term. We've been founders ourselves, and so we've lived through that experience. We started out with no companies in LatAm, and after meeting founders in the region, it's now a quarter of our entire portfolio. And I think that's a testament to the TLC that you find in founders here. I think they are scrappy, they work hard, they care a lot about the mission, they don't feel entitled, they just are determined to succeed.
What about you?
Sure. Yeah, I mean, I think also Kapital has been our first investment in Latin America at NIA Partners, and I've just been really impressed with the energy here. It's something quite special. People are really, really driven. They work incredibly hard, and I think there's an opportunity, right, with how the income of the region's been going up over time. We're hitting an inflection point with regard to digitization and internet penetration. To both take models that have worked elsewhere and deploy them here, but also to create new business models that are specific to Latin America. So really excited for the future here.
I want to add, like as an entrepreneur, like for us, like as a Latin, there has been a huge success, mainly in Europe, mainly in the States, with a lot of tech startups. So you're analyzing markets where competition, a lot of competitors, there are a lot of players. But now that you focus in LatAm is based on oligopolies. So for us, it's a big opportunity. Less competitions, and the market is needing the solutions we're building. So thanks to all investors, like there's a lot of opportunity, and in different industries is the same. So now for us, the time to stay ahead and help with our solutions to solve all different problems that businesses or consumers are facing right now.
Totally. For me, I started in this ecosystem 12 years ago as an entrepreneur. So actually to see this panel today and makes me reminded what happened 12 years ago, and it would be insane to have this kind of panel or international investors in Bogota, for example, in 2012, 2013. So after being an entrepreneur and go to United States and understand a little bit more the ecosystem, I decided to create Rockstart here just to help the startups. So I am in love in the about Latin American opportunities, and I think Latin America, this explosion today is the beginning. It's just the beginning, and the best is just yet to come in the following years.
During the pandemic, we saw an exponential growth of in a number of entrepreneurs and small and medium-sized enterprises. Some incredible ideas pop up, but they're facing, and still is a very important, crucial key, is the financing. How they're gonna make these ideas real and not just be an idea. So we saw a lot of capital venture companies popping out at the same time of the growth of these kind of companies. And as Felipe was saying, it was amazing that seeing CV companies here being interested in our projects. So the second question that I have to do is if Latin America is a hotspot right now for venture capital companies. You're seeing us as a hotspot right now, or you're seeing like a long-term kind of initiatives, or what are your expectations from the other side of the country, and of course from Mexico and Colombia right now?
Yeah, I might say it's crossing an inflection point. You've gotten your first wave of big winners, your Rockies and your new banks of the world. And so I think that's really put the ecosystem on the map. Clearly these things take time to build, but one thing I'm excited about is the sort of talent flywheel that starts to happen. As you start getting more and more companies that exit successfully, there are people who've been part of it. They know what it takes to build a startup. So those companies are going to start spinning people off. You can then go and start new companies. Pardon me. So I'm really excited about that. And then I think the other thing too is the quality of talent here is quite high, and people tend to underestimate it. So I'm very, very interested to see just what gets built.
Yeah, I'd reiterate on the point of that Grahme just made. And other people inside the company that are operators need to see what it takes to grow at kind of a hyperscale needed for venture capital. And so now you're starting to see people leave the Rappies, the new banks, and starting new companies. And because they have the know-how and the experience to start these new companies, and they have the confidence that they can receive the funding if they hit their metrics.
Guys, sorry everyone, we're gonna fix some sound thing just a second, please, sorry.
Yes, certainly. We have a All right. Do we need to redo that? No. Okay. Now it's good. Now we're ready. Excellent.
Yeah, good. Okay. Yeah.
Ready to roll.
Yeah, good.
Oh, good, let's go.
Yeah, I think the question specifically referred to a hotspot, and I think last year was probably the hottest that it's ever been. And it calmed down a little bit this past year, and I think it's going to stay calm for the next few years. But I think that if you are an early stage founder with a small, lean team who's going after a big market, VCs from America will always pay attention to you. And with the way that things are growing here, with the explosion in talent and people, enough engineers, enough operators, enough founders to build the next 10 decacorns here, I don't think it's ever going to be a cold spot again.
Yeah, in my experience, I think we are facing, a great opportunity for startups in LatAm. At least for me or for us from Rockstart, for example, next year we'll have an international investor summit with international investors coming to Colombia, and there is a lot of attention in Colombia, in Latin America. So I don't know, in 2 months we have so far more than 100 of confirmed assistants coming from US and Europe as well. So I think this is the right timing for entrepreneurs in Latin America, and I think at least United States and Europe are quite interested in Latin America at this moment.
Maybe to expand a little bit also on what Jeff said about how things are going to taper off a little bit over the next couple of years, that's not necessarily a bad thing, right? Because if you're coming in and you're building a company that's creating real value, you're always going to be able to grow, and you'll probably face less competition from people that are just trying to copy your business model. So if you're a real founder and you're building something awesome, don't let that dissuade you from giving it a shot.
So, let's change it. So let's continue with the financial point of view. And some believe that the entrepreneurs and the small and medium-sized enterprises, mostly they need venture capital above other kind of solutions, and even the traditional banks or even fintechs doesn't even have much to offer to them. But the reality could be very different, and even it changes depending on the company and the kind of thing that we're heading to. So the next question is maybe a little bit tricky, but which one is the best option right now? Venture capital, credit solutions, both? What is the perfect mix right now for the needs of the entrepreneurs in Latin America?
Gosh, I think it depends on what you're using it for. Maybe on one hand, let's say you have a lending business and you have a debt facility that you're lending off of. That's clearly a great use for credit. Maybe you're putting debt towards capex, where you have a really fast payback period, and so you can drive revenue by using debt to cover that capex. Okay, that's great. But I think if you're using debt to cover opex, that can be a little bit more challenging. I've had some discussions with friends about this. Everybody debates it. There's no right answer, but that's at least the point of view that I like.
Yeah, sometimes I think founders may assume that venture capital is necessarily the right thing for them. Maybe they saw it in the news. Their friend raised venture capital. But I think, and maybe this is stupid for me to say because I'm a venture capitalist and it's against my own interests in some cases, but for a lot of founders, depending on what you're going for, you might not need venture capital. And when you decide to go for venture capital, you're signing up for something very, very extreme. You're signing up to go for gold, go for $1 billion outcome or more. And there are so many people who became generationally successful with a much smaller outcome. So when you take on VCs, you're kind of putting that aside and saying, I'm going to go after a huge market. I'm going to allow my VCs to own a big percentage of my company, and I'm going to be like a generational entrepreneur. And so for some people, they hear that and they know that is me. And if that's the case, then, well, first, I definitely want to talk to you. But also, then venture capital is probably right for you. We didn't talk about this in the question, but for many entrepreneurs, bootstrapping is the right way to go. If you can make that happen, grow nice and slow, but have a lifestyle business, maybe you can sell it for an outcome that changes your life and the life of your family. I think for most people who don't have that little bit of insanity that entrepreneurs have to have, that might be the right outcome. And if you're a little bit insane, then maybe you should be a founder.
Yeah, I agree with what Jeff said. And I think also, going back to if you're not going down the venture route, there's now enough angel investors, it appears, in LatAm that you can raise outside funding just from angel groups and syndicates, not just venture capitalists.
Yeah, I agree with everything. So I think for me, it depends. And in Rockstar, we love to try to find a balance between debt, between, of course, bootstrapping and venture capital. So I think founders need to try to find the best way for them, depending on the business model, the skills that they have, and the level of relation that they have with, for example, venture capitalists. So at the end, it depends. But for me, the best way to approach it is trying to find a balance between different resources that we should have.
I think if they answer it right, but also as entrepreneur is not what do you need, is when do you need it. If you're starting a business, you're starting with friends and family, and then you start realizing where are you going, what are you building, what are you solving. Then it comes to a phase that I need venture capital money, or I prefer going with debt. How can I scale faster? Not all businesses need debt at the beginning. It's more at a mature phase. But also, if you want to grow faster, go for the VCs because they are aggressive and they're going to help you scale faster. So, each entrepreneur is different, each business is different. It's not only about tech startups, we also have traditional businesses. You have casual businesses, you have long-term businesses. Each business is really different. And so entrepreneurs, I think, they don't need to rush it, they need to find the right timing.
we're seeing a lot of wrapping out of the year, like wink, wink. But something that is going to be crucial the next year is definitely what's happening in our region, like the conditions in Latin America to actually make businesses, like be part of the growth in the companies that are already existing, be part of angel investors in the new that's creating. So I would like to ask you, what do you think are the fundraising conditions for founders in Latin America in 2023? How it's going to be? How do you picture it? How do you think it's going to be the next year that is just around the corner?
I think it really depends on your business. So let me go through a few cases. I think if you're a later stage business that is not cash flow positive or close, just to be honest, I think you're going to have a hard time. The market is very bad for that already in the United States, and I don't see why it would be different here. But I think if you are an early stage founder going after a big market with a lean team where you keep it as small as possible and you can show signs of traction, there will always be a market for VCs to invest in that. So I think if you meet those criteria, VCs will be very happy to invest in you in 2023.
Yeah, I think being able to show a path to profitability is huge. I'd also say that there's still more dry powder in venture capital than at stages in 2018 and 2019. So the best deals are still going to get funded. The best deals are still going to get 8 or 9 people competing to invest into the same business. So as long as the businesses show an ability to become cash flow positive, I think we're in this area of the heavy start. We're in this age of the heavy startup where there's growth at all costs, and you're just trying to win market share. But now you have to win market share and stay agile in the process as well. And I think that's the big change headed into 2023.
The market changed. Now we need to understand, like, as Taylor said, like, there was a moment that it was like going and all, but that really made mistakes by giving products for free instead of focusing on revenue. Businesses are made out of revenue. You need to pay salaries, you need to pay your suppliers, you need to pay your vendors. Yes, it's important to grow with customers and grow a solution, but at the end of the day, you need to provide. So you need to always look to generate revenues while increasing your market share. So the game is a bit more complicated right now, but it used to be that way. So the market now it's different. Yeah. So you need to focus. That's it.
Yeah, it's less going into winter, more going back to normal, right? I mean, that's kind of how I might look at it. I think the other thing too is that a lot of VCs were very, very price insensitive over the past couple of years, right? They would slap huge multiples on businesses that, frankly, when you peel back the layers and you look at, okay, what kind of gross margins are they doing? How structurally profitable is this business? Maybe they didn't command the kind of valuation they were getting. So I think also, what you get from capital markets is going to depend on what kind of business you are, much more so today than over the past couple of years. Like look at the past 2 years as an anomaly, and then say, okay, knowing that things are going back to normal, but we still have passed an inflection point. How do we move forward, right? So,
yeah, totally. I think that conditions changed a lot in the last year now, and I think now we will need to be focused on unit economics and path to profitability, at least to have some path and in the future. And I think at least what I see in Rockstar, the portfolio companies, is that today the funds are super focused on numbers and the path to profitability, unit economics. So at the end, yeah, you need to keep growing, but it's not like 2021 that it was the only thing that matters. Today, yeah, you need to still grow, but at the same time, thinking in a long-term vision and creating a business model. Of course, it's impossible to be profitable in the first years if you are growing and building something big, but at least you need to have a clear path to profitability in I don't know, in 3 to 5 years. And if you can show that to the investors, I think you will be fine. But in other ways, it's going to be really hard to get money the next year, for example.
Now, what is proving your business model? You have good margins and you can make money out of it. Is the best way to tell the VCs that is the right moment to put money and scale it much faster.
So I'm gonna. So see, I would like to know, like, what's the most common mistake that some like entrepreneur or a small company come to a VC that they should avoid at all costs in 2023? That you say, like, every time this kind of entrepreneur, this kind of company come to us, to the VC companies doing this, we already know that that's maybe not the best place to put my money on. Like, but you know that the idea is good, but maybe the way they put it is not that right. So what's like a kind of advice, but at the same time, like, what's the most common mistake they're making, so everyone here and everyone seeing us via streaming don't make the same mistake?
I would say there's you got to know your audience and who you're pitching to. And so going back to the VC, the biggest thing is you can get through a pitch and the pitch can be amazing, and then you ask a founder, what does success look like to you if you pull off your thesis and have a crazy great exit? And if they say 50 or 100 million, that doesn't really meet the threshold or criteria for a venture backable business. And again, that can be a great lifestyle business and a huge life-changing business for you and your family. But for a VC fund, that doesn't, each deal from an early stage perspective needs to have the ability to return an entire fund. So you have to look for, 30 to 50x multiples to be able to invest in one of these companies. And if that's the goal, it becomes really hard to work with some early stage founders who might just be looking for a different outcome than what a venture capitalist is looking for.
I have two that come to mind. One is we have zero revenue, or we have a little bit of revenue, but we have 100 employees. That's a mistake, hiring too many people too fast. The second one, I didn't expect to see this, but I've heard enough founders talk about it that I think it's real, is raising more money than they need to for reasons that don't have to do with the actual requirements of the business, and may have something more to do with something that lives inside the founder's heart about ego, or feeling like they're big enough, or my friend's company is not as good as mine and they raised 5 million, so I need to raise 6 million, and I need to get that TechCrunch article that talks about how much money I raised. Maybe that's the right thing to do for the business, but if you can, much better to raise as little as you need to just get to the next stage. That way you save more of your company, you get diluted less, and in the long run, your company is more successful and has a better chance of winning.
Maybe to expand a little bit, I think those are all really, really good points. I think also don't lose sight of the need to be really, really good at storytelling, right? I mean, this is something that I've found really impressive about the whole Kapital team. They're very clear about the problem they're solving. They're very clear about how they're solving it. And they're very clear about why nobody else could solve it the way that they can. Boiling it down to what's the story? What are your power metrics? Why should a VC be interested? And keep it simple, right? I mean, remember that a lot of investors aren't living and breathing the problem every day the way that you are as a founder. So be aware of that. Put it in crayon. Make it really simple. Make it really understandable and articulate it well. So I think that's another little bit.
Hola, yeah. Something that's I was thinking while you're talking, and it was one idea that we currently hear here in Colombia is like Colombia is gonna be the next Silicon Valley. Like, we're heading there. Like, we want to go there. But you came from the Bay Area, from Miami, and even from Mexico and Colombia, you're still seeing the country in a different way. Just saying, like, we have to be the next Silicon Valley. You as a venture capital companies and you're working every day in this, you should think that Colombia or Latin America should head to be the next Silicon Valley, or we should do something completely different, like agrotech or fintech or art tech or so on. Like, we really should put our hopes being the next Silicon Valley in creating ideas and pitch and try to catch venture capital to say something like,
we have a company that's gonna make Bogota the next Silicon Valley. So do you think that's the right point to do it right now, heading to the future? Or what's your advice so to the environment and ecosystem in Colombia and in Latin America to, hey, maybe don't think about it and maybe you should do something a little bit different?
I think it depends on how you perceive Silicon Valley, because, you know, there's a lot of different views there on how people view what you go to Silicon Valley for. And so if you think of Silicon Valley as this place of open innovation and anyone will listen to your idea and give you a chance and is very excited to network and make connections for you that you wouldn't have otherwise, then I think, yeah, it's a great goal for Bogota to strive for. But on the flip side, there are some negative connotations of Silicon Valley too. And so I think it really more so depends on how you perceive Silicon Valley effectively.
I really hate that pitch, to be honest. I think we need to be focused on create business, create, you know, ecosystem, and solve problems, but not, you know, in a slogan. I don't care if we are Silicon Valley or Singapore or Israel. You know, we need a stronger ecosystem, and that's it.
Right. Boil it down to first principles, and what part of what made Silicon Valley special was the attitude Taylor mentioned, but also sort of this concentration of expertise on how to actually build a startup, right? And the fact that successful companies are getting built all over the world, honestly, means that there's going to be tons of opportunities for different places to grow into tech hubs. So yeah, keep an open mind about that. Embrace what makes you special, and don't feel the need to just rigidly copy everything. I do think there are certain ingredients that need to be there, right? I mean, need to be people who know how to build a business. There need to be, you know, sources of intellectual capital, talent, you know, universities, so on and so forth, right? Like, don't lose sight of that. But I think just boil it down to what made Silicon Valley special, and be aware of the fact that you might have some of those ingredients already.
For us, how we see Colombia, Latin America, Mexico, Brazil, etc., is there are different needs depending on the region. If we're in Latin America, basically entrepreneurs are solving basic needs, basic problems, because we don't have that solution. But if you go to Europe, you're solving the API of the API. You know, so there are different needs and different necessities, and entrepreneurship is coming along. Why we're here in Colombia? To foster that entrepreneurship environment. Because right now, what we see is like the innovation is right on hand. You have the right mindset, you have the right people, you have the right ecosystem. It doesn't matter about the governments, you know? It's about to make it happen, because for us, Latin America is in the right stage. Now we need to foster it and keep pushing it to make it happen.
Point is just that you can have, you know, we listened to, I think 10 startups just pitch, and I think I'd heard 5 of them pitch on virtual demo days from other accelerator programs. So you can be found here in Bogota from investors in Silicon Valley. So I think it's getting much easier to get in front of investors as well.
Go. I was thinking a little bit, well, while you're talking, something pops out in my mind, thinking in 2023, and that is a very challenging year, but it's, at the same time, it's full of opportunities, and we're looking at it's a whole new world, like Aladdin, because we're getting the past, like everything that happened in the pandemic, and really getting in another mood. But I would like to know, like, your point of view about the 2023 valuations, like what's going to happen, or what you think about is going to be the 2023 valuations.
That's a good question. I don't know that anyone can really predict the future, but
Otherwise, you wouldn't be here, man.
Yeah, exactly, right. Again, I think it depends on the kind of business that you're in. I mean, I think one of the issues that we saw over the past couple of years was companies that weren't software companies in terms of their margins, in terms of their profitability potential, were getting valued like software companies. And so I think number one, that's something that's going to end. I think number two is within the software space, things got really inflated, right? I mean, your median public SaaS company was going for upper teens in terms of an EV to ARR multiple. That's gone back down to something like a 5 or a 6x today. It's actually very helpful. You can go to the Bessemer Cloud Index and use that as a pretty good benchmark, right? But that's not necessarily a catastrophe, right? I mean, this is what companies were trading at for almost all of the past decade until things got really overheated. So I think going back to normal, yeah, don't expect ludicrous valuations. I think also VCs are perfectly happy to give you a premium for the fact that you're an early stage startup. There's a lot of future growth potential, but the valuation of a company is basically the discounted value of its future cash flows fundamentally when you really break it down. So look at it through that lens. How much can I ultimately sell this company for in 5 to 7 years if you're an early to mid stage startup? And based on that, how much are investors going to be willing to pay in order to hit their return targets?
We're hearing this and wondering, how is that going to impact me? Am I going to have to take more dilution? Is this going to hurt me if I go and raise money in the next year? I think if you're a company that meets the right profile that we've been talking about, early stage, a lot of growth ahead, heavy software, good gross margins, and a lean team, your valuation might be lower. It might be more similar to 2019 than it would have been in 2021. But you also don't have to raise as much money as those companies did in 2021, and you may end out net ahead. So as an example, if a company last year raised 2 million at a 20 valuation, and they didn't actually need that 2 million, even if investors are only willing to give you a 10 million valuation now, you can raise less than 1 million because you have a lean team and you're growing fast, and you'll have more of your company in the end than that other founder will, even though you started with a lower valuation. So I do agree that they're going to be lower this year than they were in the past. Not enormously low, like just how it was a few years ago. But for founders who are operating lean and know how to run their business, they're going to be absolutely fine.
Yeah, and I would more point to, it's going to come down to how fast we start to slow the increase of interest rates. I think Jerome Powell said that interest rates might go from 0.75 to a 0.5% rate increase, and so that helped the markets. But I think as long as interest rates stay around 5%, is where many people think they'll end up, I think revenue multiples will stay somewhere around 10 to 15x, which is way down. The top 5 publicly traded tech companies were trading for a 45x revenue multiple on the public markets at the peak, in the peak of 2021. And so I think interest rates are going to be directly correlated with valuations in 2023.
Totally. And also seeing like an entrepreneur is where I'm at right now, like, is it a good time to start my business? And for me, it's the perfect timing. Why? Because in crisis where the best companies are built is where great fortunes are forged. And it's the best thing that happened for the ecosystem because you're going back to reality. You're going to be more focused in executing and make it real.
Something like 150K on a 1.5 million valuation. That worked out okay.
We're heading to the end of the conversation, unfortunately. But you touched a point that I think is crucial, is the ecosystem. Like the entrepreneurs don't live alone, like in the air. So what do you think about Colombia and Latin America ecosystem? Like, did it exist in comparison, for example, to North America or Asia or other countries in America? What do you think about our ecosystem? How is it going right now, and what's the next step that we should like in this point? That's crucial. What's the next steps? Like the next step that have to be in the next couple of years to actually be a very big and important ecosystem. It not just be like islands like in middle of the ocean.
we need to create bigger hubs and have more successful entrepreneurs coming back to the ground to support another entrepreneurs, young entrepreneurs, and that kind of collaboration generated a lot of synergies. And for example, for every startup that succeed in the world, there is a lot of the impact after the success is huge. So after that, you start to see some funds, Rappi Mafia after, or all this kind of things. So that starts to generate a huge impact. So I think what we need is to have this first generation of successful entrepreneurs and trying to work together with different regions at the same time. I think I don't believe on the idea that Bogota or Colombia need to be a hub. I think in 2022 and 2023, we need to be integrated with the rest of the world and work together with the rest of Latin America, but also with United States and Europe as well, and Brazil, for example, because I think this is a really unique way to succeed as an ecosystem.
And also, Felipe, complement. Why we partner together? To help actual companies. It doesn't matter if you are independent, a freelancer, a formal company, a tech company, a design company, whatever. Just do it, And we need to keep pushing. Why we're here? Because we want to help you. We want to foster. Why we put Kapital House? To help the entrepreneurship and community. We want to give you all the tools to make it happen. 20 years ago, there was not enough people interested in investing in LatAm. Now the market changed a lot. And yes, we're facing a crisis next year. Yes, it doesn't matter. For me, it doesn't matter.
Any other advice about the ecosystem in Latin America? I think we're speechless about our ecosystem. But go ahead.
No, I don't want to take us over time. I think these have been really, really good points, and also renewed interest from the U.S. Right? I mean, there's been this huge migration also of investment capital to Miami, right? Not to talk my own book here, but I think it's going to make the U.S. Capital markets ecosystem a lot more accessible to Latin America founders in the future. So yeah, don't be shy, reach out, but keep building, right? Have a mind for efficiency and know that the community is really, really starting to emerge right now. And it's a great time. Constraint also creates great outcomes, right? So
hello. Unfortunately, we're running out of time. We just have enough time for one last question, but I think that's crucial because a lot of people here in the room, including myself, are here for hear your advices. Like you're the guys who are making it happen, like the guys who are making history, kind of. So what's your advice for all the Latin American entrepreneurs and small and medium-sized enterprises right now? What's that advice that everyone here in the room and in the streaming have to know right now from you?
What VCs look for in founders. But one thing that I wish founders thought about more is what they look for in their VCs. It's not enough to just write the check. It's like a marriage. Like if this works out, we're going to be together for 10 years. I think that's longer than the average marriage lasts before they get divorced. And here there's no divorces, so we're together for a long time. And so, for me, I've been talking about what I like to look for in founders and what I hope a company will be like. But on the same side, that company should hopefully be interviewing me also, just like they interview other VCs, and ask a lot of questions about how do we support our companies? How can we help you? Get a sense of what I would be like as a person to work with, and if you think you could enjoy working with me for 10 years. For some founders in this room, you're going to be able to choose among multiple VCs, And there's all these things like, valuation and check size and all the obvious things, but something else is just, do you vibe personally with that VC? Can you imagine them being your therapist and your partner for the next 10 years? And if so, then they're probably a good one to work with.
Come on, don't be shy. That last.
Honestly, and talk to other founders too. I mean, Fernando here and his whole team at Kapital, I'm sure are always happy to chat with you. And I mean, they're the people who are in the trenches actually building, right? I mean, we're investors, and some of us have built companies, some of us haven't. But I think there's really no better resource than chatting with other founders. So lean into that.
Yeah, and I would say, lean on other founders and pay it forward as well. Like, ask for advice and ask for help along the way, because there's a lot of ways to mess up in the process. And I would say also, going back to reaching out, like, try and help your employees a lot more through the process and keep your head down and work hard. Don't benchmark yourself against your competitors, benchmark yourself against yourself and the pride that you have in the work that you do individually. And I think that's going to go a long ways.
Yes, and I want to thank all you guys. To be honest, Broom guys bets on the founders. You need to find a good VC that actually bets on people. Like Y Combinator, Broom, different. Tenacity, Taylor, and Ben, they are always open to have a call. There's always problem when you have a company. There's always trouble. Is how fast are you able to fix it and to change it away? NIA partners, we have a chat directly with them. Good times, bad times. You need to be transparent, because these guys are the guys that actually help you make it happen. Don't become the guy that thinks that knows everything. No, we don't know anything. So just ask for advice, help among the companies, create an entrepreneurship, talk with the people that it's next to you. What are you doing? How can we make something? How can we grow together? That's our vision, and that's why we're here. And that's the point of Kapital House.
I think that there's no better words to end this panel than that one. So once again, thank you very much for being with us today here in person and in the streaming. I'm Andrés Montenegro, head of Special Edition of Forbes Colombia. And thank you very much again to everyone here in the panel. And if you need to reach out, stand up when we finish the panel and contact and get your social media, your Twitch, your Discord, or whatever you are. And thank you very much again, and thank you for your time and for being part of this panel.
Hello? Yeah. Thank you very much for this amazing panel. It's been wonderful to hear about venture capital and entrepreneurship in Latin America. Please, we'll have 10-minute break. And then we'll have a very special guest, which is Arash Firdousi. You already heard about him and know who he is. And he'll be telling his story about behind Dropbox. So just let us accommodate things here, and we'll be back, okay? Thank you.
that needs no introduction. It has been one of the most successful entrepreneurs in Silicon Valley, and for us, a personal mentor and friend. So this is Arash Ferdowsi, the founder and ex-CTO of Dropbox. And of course, this is René Saúl.
I thought you were speaking to me at the beginning.
We're working, man. We're working. You know? Step by step, you know. But this is René Saúl, the CEO of Kapital, and my partner and friend. So they are going to talk about how to scale a big business and make it happen.
Thanks, Fernando. Thank you. I want to thanks everybody that is here. I'm going to say a little brief in Spanish.
Oh, yeah.
That's okay?
Yeah, no problem.
Muchas gracias a todos por haber venido. Como se los manifesté en el anterior, estoy enamorado de su país. Colombia es un país que para nosotros representa hermandad. Entonces, con muchísimo gusto les vamos a compartir lo que es Kapital y en una historia con una persona muy exitosa como Arash, que se tomó el tiempo de venir. Now I want to switch. I was saying that I'm really in love with the Colombian country, the entrepreneurships. There are people that they fight, they help each other, and it's that they value that you came from a long way. He comes all the way from San Francisco. I thought it was a shorter flight. When he told me how many hours, was like, oh, it's like flying to Europe, right?
Yeah.
Well, thank you guys being everybody here. We're going to talk about Arash early stages. Like Fernando says, he's a man that doesn't need introduction. But at the beginning, he struggled like everybody did. And I think that's the path of an entrepreneur. Of a guy that doesn't surrender, that it's going to be betrayed, that it's going to have a lot of bumps in the ride, but it's always going to keep pushing. And thank you, Arash, being so here with us. I appreciate it personally. You know that we really like you. We trust you. We appreciate your support in every way. So please, let's give a hug to Arash Ferdowsi from Dropbox here.
Thank you, René. Yeah. Thank you, everyone. I'm very happy to be here. I'm a huge fan of René and Kapital, but also very excited about the Colombian community. I actually have a number of startup investments in Colombia. Excited to meet a lot of you here later, and yeah, excited to talk about Dropbox, Kapital, entrepreneurship in general.
Sounds good. Well, Arash, can you tell us a little bit how was your early days back the day when you started? Because it's famous, you're very well known because you dropped out of school. So you were in MIT and then you just decided to drop out. I mean, that's a huge, he was in one of the finest universities in the US, being the engineer, and then you drop out.
Yeah, so I was actually in the middle of my third year in college when I decided to leave to start Dropbox. Can you guys hear me? Or is it? Yeah, it's good. Okay. And so I actually met my co-founder Drew through a mutual friend. So Drew kind of had an early idea for Dropbox and was looking for a co-founder. And so we didn't spend more than I think 2 or 3 meetings before I decided to drop out of school and start Dropbox with him. And we joked that it was like a shotgun marriage or like going to Vegas and just kind of getting married on a whim, because we didn't know very much about each other, but it just felt right to both of us. And I sort of made the leap and kind of just kind of happened from there.
So you took a big risk.
Big risk. It was hard. I mean, my parents were not excited at first, so that was challenging. Just like trying to convince them that they made this huge investment in me to go to the best college, and then I told them I was going to drop out. But actually, the way I convinced my parents was my dad actually had this problem of he's kind of an entrepreneur himself. He started his own company, and at the time he was emailing himself files back and forth, and using USB drives, and that was such a pain. And so I actually gave him an early prototype of Dropbox that we had built, and he kind of saw it from there. He was like, "Oh, I get it. I can see why you want to kind of pursue this." So that was kind of how I got my parents
That was a tough conversation. I can imagine your dad, you tell him that all his effort that you made, because you were in a really good school, getting hard there, and then you're telling me, hey, Daddy, I'm leaving the school. I was like, why? Well, right now, I think he doesn't.
Yeah, he's good now. And then, but also like, I think another thing is MIT is like very supportive of entrepreneurship. I'm very grateful for that. I think one of the things that if you leave MIT, they let you reapply. They let you get reinstated if you want, and that was something I also used to convince my parents. I told them that if we failed, I could always go back, even though I didn't really have an intention of going back. I probably would have tried something else at that point.
And then, well, there's the first thing we have in common. You got to accept in the Y Combinator, and which everybody that doesn't know what Combinator is, it's an accelerator, one of the most important accelerators in the world. With one of the most successful startups like Dropbox, Airbnb, and I can name a lot of companies that have been to the batch that really help you. I mean, for me, it was like to get focus, and then I don't know what it meant to you.
Yeah, I mean, I think at the time, Y Combinator has grown a lot. I think when we did Y Combinator, they were only letting in about 20 startups in every batch, and so you'd really get to know all the startups in your batch, and then also the founder of Y Combinator, Paul Grahme. We got a lot of time with him, and I think one of the he was this absolutely brilliant writer and communicator, and I think one of the things that the main thing he emphasized all his startups was focus and simplicity. So simplify your pitch, simplify your product. What is not what are the top 3 things you're working on, what's like the top thing you're working on. And so I think he was very helpful in helping us focus in those very early stages, but also simplify our pitch, like have as few slides as possible, as few words as possible. And if you don't know what's important about in your pitch, or if you're not able to communicate what's important, how are your investors or your customers, your employees going to know what's important? So I think just having that clarity and focus, I think, is one of the best things that Y Combinator taught us.
Yeah, I totally agree. I mean, on our part, when we were starting on Y Combinator, we got lucky because this is really interesting. When we applied to Y Combinator, we got rejected with a big accelerator like 1 week before. So, but we like the journey of being a startup is you never need to stop. So we got rejected by this accelerator. We are a company that on our previous company, we sold it and we invested all that we made into this new business. We went all in. So then we were starting to find new ways to get to like keeping growing and scaling, and we applied to several accelerators. We got rejected. And then we applied to Y Combinator. This is one of the most interesting stuff that has ever happened to us, and Fernando can vouch for that. So we got to the interview email from Y Combinator because they ask you to get an interview. I don't know back in the day if it was different, but they interviewed us. It was 60-second interview. They just went right to the point. I was like, we were like nervous. I was like, I was gonna have a baby and I didn't know what to do. Yeah, And then I was like, Fernando, what happened? What did I do wrong? Did you we were nervous, right? 3 days after, we didn't get a call. We didn't get an email. 5 days passed. 7 days passed. 1 week passed. And guess what? The next day, the email from Y Combinator was in our spam. No. Let me rephrase that. So they sent us a follow-up questions because the investors always, you can ask Taylor around here, Paul, Grahme, Taylor, and Taylor from Tenacity. They can tell you how much they ask questions and they like to learn more about your business, right? So Y Combinator did the same. They asked for some questions and we sent it. And it was on the spam, but we didn't know. And then this guy, 1 week after, told us, hey guys, I saw your questions and they were at a spam. So this guy checked his spam. Well, after that, there is a rule in Kapital. Everybody needs to check their spam. Always. And we were at a spam. Wow. And then he told us that our email was at a spam and that we got accepted. And then our life changed and we learned, like he said, that we need to simplify everything. I'm going to say in Spanish. Entre menos es más. Less is more. So you guys that are pitching, that I got to see some guys of you pitching to the investors, always reduce everything, go directly to the point, because they hate the decks. Imagine, they see a lot of decks during the day. You're an investor. You're also an investor in different companies around the world, and you like to always go directly to the point. Yeah, that's what, when we're practicing, because Arash is also our investor and board observer, and He helped us. He's our mentor, and he goes, Rene, you need to reduce everything, go directly to the point, and be precise. So that's what we learned at Y Combinator.
Yeah,
on our part.
So I mean, I think we had a very similar, similar experience. I think one thing you mentioned, just the just the importance of like persistence as an entrepreneur, and it's just such a roller coaster. And for us, we had gotten into Y Combinator. That was that was incredible validation. But Y Combinator was actually on the East Coast in Boston at the time. And when it was time to raise money, we went out and talked to all these investors. And the problem that we had was that there were hundreds of companies who would kind of try to solve the problems that we had. So there were startups that were focused on building backup solutions. There were startups focused on sharing, on syncing files. And investors would ask us, there are hundreds of products that do similar things. Like, what's different about you guys? Like, why should we use Dropbox? We didn't have good answers to those questions in the beginning. And I think that might be something that a lot of you run into if a lot of people have tried to solve similar problems as you. And eventually we came up with good answers. We would ask if people would be using any of these products, if our investors and none of them would. Another thing that I think was really important was just the fact that these solutions, people were using had to use so many different solutions. The thing that was different about Dropbox was you place the file in a folder, and we would handle backup, handle syncing, handle sharing, and it was just one simple, elegant solution. And it was hard to kind of communicate that, but we got better at it through demoing, through simplifying our pitch, and sort of eventually got investors on board. And actually, but there was a kind of a long list of investors in Boston who I think said no, ended up regretting not investing in Dropbox. And I think another thing, and you guys might run into that, raising money from investors in Colombia versus in the U.S. I think the best investors realize that even if it's a crowded space, even if no one has solved the problem successfully before, it's all about the founder. It's like identifying the founder that's humble, doesn't realize how good they are persistent, are able to kind of handle all these, just kind of run through walls really. And I think whether it's Y Combinator or Sequoia or some of these other investors that have a lot of practice at sort of pattern recognition, I think that's ultimately what they're looking for. They're looking for big markets and then founders that are not going to stop until they succeed.
Yeah, I totally agree. I mean, it's a hard way. There's a lot of things to do on our case. But something that when we get rejected, you always tell me, doesn't matter, keep going. And you're one of those persons along. Jeff is here, Jeff Rosen. Yeah, he the Blade Runner. He runs Broom Ventures, Arash. And I want to say this openly because when we were in demo day, because then you go to demo day, right? After that, they teach you in Y Combinator, you get to demo day and get to pitch to 1,000 funds in 30 seconds, right? But I still remember that day because Jeff told us that he invests in people. We didn't have to pitch the market. We didn't have to pitch our idea. He invested in us. And when you take money from VCs, TikTok is on it. You need to grow, but you need to do it like we were pushing in the previous panels in an efficient way. And so as a founder, you need to always find a solution. And not only for your company, but or for your product, but for your fundraising. So what I'm trying to tell you is never stop. For every no, a bigger opportunity is gonna come. Just keep pushing. Never fold. Just keep pushing because they invested in you. He put his money in us, so we have a responsibility to him, to our investors. So that's what I try to. We have that heavy weight on our back. So always bet on yourselves and never stop. So Yeah, I totally agree on that. That the best investors invest in people, not in the TAM, not in the product, in people. I totally agree that. And so going back to our Star life and entrepreneurship journey, after Y Combinator, you got to product market fit. For guys that don't know what is product market fit, is when you already have the growing, your product works and sells alone. And I think you were solving a problem. That's one of the most important things you need to do, solve problems. So find a problem and then build a solution. That's what we do at Kapital. This is our house, and we want to welcome to everybody because this is what I see. When you're starting a company, people don't have money to pay rent, right? And they use their money to pay rent for offices, and instead of you use it on working capital to make your company bigger. And we want to be remembered in your journey as the guys that bet on you and we opened your house. That's for the guys that are starting a company. That's what Kapital is for these guys that are coming here. That's how we wanna be remembered. I don't know who remembers his kids when. Raise your hand. Who remembers when your first bank account when you were kids? Everybody remembers, right? Levanten la mano los que se acuerdan de su banca de niños chiquitos. Yeah, everybody remembers. Well, ask them when they get their Kapital account. Everybody's going to remember us, and that's the way we work, and that's how we solve a solution. Also, SMBs need sometimes they don't have a boardroom or a meeting place to get their customers. For bigger SMBs, which is our main sweet spot of companies, this is what Kapital is. You can use it, and please welcome you, everybody. So going back with Arash, I know that you grow a lot. You were solving a problem. You got to head to 800 million users, right?
800 million.
800 million users.
A lot of users.
Yeah, that's big. It took you a while, right?
It took us a while, but I think
you were worldwide.
Huh?
Every single
worldwide, and I think it just kind of, and we got very lucky in the sense that the problem we decided to solve was one that was very universal. It was, it was a problem that we had, but it ended up being a problem that, people in every continent, every industry, students, freelancers, small businesses, medium businesses, large enterprise, everyone. And so we got lucky in the sense that we sort of picked a set of problems, tried to solve them really well, but they happened to be universal. And so with just a little bit of virality, a little bit of sharing built in, coupled with a problem that pretty much everyone had, and it just sort of exploded. We did not expect it. I think there was one thing, we created this like promotional video to show off what Dropbox did, and we submitted it to Dig. This may be before a lot of people's, I don't know how familiar people here are with Dig, but it was kind of maybe 15 years ago. It was almost like Twitter or Facebook in the sense that you just submitted a link, and then if something gets to the top of Dig, it's like something going viral on Twitter. So we put a link to this demo video, and within a day, 100,000 people were on our waiting list. And so we just had to like pause everything and figure out a happy problem. Very happy problem. But like, how are we gonna solve this? Because we were getting literally thousands of emails from universities, from like governments, from like businesses, and they were all like, we want to deploy Dropbox to like everyone. And so that was when we knew it sort of struck gold, and we just had to we had to. You knew that you were gonna become rich. I don't know about that, but initially I think the goalposts kept moving. For us, when we got into Y Combinator, we thought success would have been like being acquired by Google for like $10 million. And then
you need to tell your story about Google.
Yeah, so that I can get to that. Yeah, but the goalposts just kept moving, and so it kind of moved to, it moved to building a successful company. It moved from being acquired to building $1 billion company to eventually like going public and being a very successful independent company. But that sort of happened as we hit these milestones that we never expected we would have. So but yeah, I can definitely talk about Google.
Yeah, you need to hear this story. Tell us about your Google journey.
So this, among the many sort of inbound interests we got.
One of my favorite stories from him.
Yeah, so it was just at this phase, it was just Drew and I, my co-founder, and so we were working on Dropbox. We had sort of put out this demo video, so there was a lot of buzz about us. And then we got an email from Google, and they said that they saw our video, they really they're really excited about the potential of Dropbox. They wanted to talk to us, and we didn't really know what it was about. Was this did they want to partner with us, like distribute us, or did they want to acquire us? But we decided to take the meeting, and then they introduced these people. There was a product manager, an engineering manager, and they introduced these people as, I'm just like a PM, I'm just an engineer. We love Dropbox, we just want to chat. And then they started asking like sort of very detailed questions, and actually very detailed questions about how Dropbox worked from a technical standpoint. We started getting kind of nervous, but we thought it would be rude to not answer their questions, so we were pretty open. And then maybe like 20 minutes into the meeting, someone walks into the door, rollerblades in actually, and we were pretty shocked. It ended up being Sergey Brin, one of the co-founders of Google. And then he knew about Dropbox, and he actually knew a lot about Dropbox. We were very surprised he even knew what Dropbox was, and he started asking, like, I noticed like when you put a file on Dropbox and rename it, it doesn't re-upload the file. How do you know it's the same file? And then like when you make a change to the file, it uploads really fast. Like, how does that work? And then and then Drew got up on the whiteboard. He was kind of like whiteboarding it, and then afterwards we were like, "What did we just do? We just like gave away all our like trade secrets." So we felt pretty stupid, and at that point we decided like we weren't going to take any more meetings like that, just because I don't know, we just knew we had sort of like really hit a wave. Very excited to like build the company. We had no interest in selling. And actually, what's funny is that we actually told this story to the writers of this series called HBO Silicon Valley. I don't know if anyone has seen it, but so actually there was this scene in Silicon Valley. It was called the brain rape scene, where they had basically given all their trade secrets to an investor in a competitor's company, and so that was based on the story of like Google doing that to us.
So well, when I heard this story, can you hear me, guys? Okay, so when I heard this story from Arash, we told everybody in our team that it was forbidden to use Google Drive.
Yeah, they're gonna steal your secrets.
Yeah, they're gonna steal your secrets, maybe. Yeah. So guys, everybody that is here, just with pure respect to Arash, and what he did at Dropbox, stop using Google Drive. I hope this doesn't get to Google, by the way. And that's why I had an iPhone.
Yeah.
Yeah. And but that's an interesting story. We're entrepreneurs. You need to always take care of your secrets. You can always talk about what you're doing, but always learn from other people's mistakes. Learn from your own mistakes, because they may be helpful in the future. You might be something that can become huge. So that's why we always we also got stolen one deck. Yeah, and then a company
investors in competitors.
Yeah, and then we saw that the link was open in another country, and then eventually we saw that the company was doing exactly what we were pitching. I was like, "Come on!"
Yeah.
No, that's a true story, and we're like,
definitely happens.
It happens. So you got to deal with it, and just knowing that what you think, 20 people are already thinking, so you're not the only one. So that gets me to the point that I learned it from one of our investors, Ben Narasin, that he couldn't be here. But he told me something, because I was scared of talking to an investor. And he said to me, Renee, no, ideas are cheap. Execution is dear. So always focus on execution. And he's so right. It's how you execute, how you get to communicate with your company, how the culture, how fast can you deploy something. And so be careful. Don't use Google Drive. It's banned. And but you also got to meet Steve Jobs also. They want to buy you, right?
Yeah, so this was a very different meeting. It was much later. It was maybe 3 or 4 years after the Google meeting. So I think we're better prepared. We weren't going to go like show them our roadmap and our code or whatever. But we actually said that we didn't want to meet him because we were not interested in an acquisition. But they were very persistent. So we were like, okay, we'll come in, and this was actually a year before he died, so it's pretty sad. I'm just glad we got to meet him, because I'm such a huge fan of Steve Jobs and everything he built, and Apple and everything he built. But Yeah, we spent almost an hour with him at the time. I think we were probably like maybe about 30 or 40 people, maybe 50, 100 million users. So I think pretty big at the time. But they were working on iCloud at the time, and they wanted to buy Dropbox to effectively become iCloud. We took the meeting. He was very gracious. He told us that he was a big fan of the product. That it was a great product
at the beginning.
Yeah, he was, and also just such a compliment to come from Steve Jobs that he loves your product. So we kind of heard him out. Like he told us what Apple was planning to do. We were very, I think we were very polite, but said we weren't interested. That we're sure that he would understand as an entrepreneur how exciting the stage that we're at is, and that we wanted to keep going. And so he said that if you ever change your mind, we would love to have you. But then he kind of threw out a little jab. He said, but I really do think that you guys are more of a feature, not a product, and we can definitely implement this. And so he was kind of a little bit threatening, but it still ended kind of very positively. And
I will that was kind of that. I see Steve Jobs in the room.
Yeah,
just
we were very excited for the meeting.
Yeah.
And nervous, but
well, somebody that size of, and I mean, I think he's the most brilliant mind we've been able to get to know. What he built, what he did with Apple, the iPhone, the iPad, the already products that already existed.
Yeah,
you were saying that before.
And I don't know, there's just I feel like values alignment between we felt like with us and Apple and Steve Jobs, just like his emphasis on simplicity. And he was just such a great editor. I think he believed in bringing the greatest creative minds, giving them a lot of freedom. But then he was the guy who edited, who said, this isn't good enough, we're cutting this, and kind of sent the teams back to kind of iterate more if it didn't meet his bar. And I think that was like his greatest talent. I think a lot of times CEOs and founders, they get credit for things that their team does, and I think they should get credit for building a great team, but it's in a lot of cases it's the team's coming up with the idea, and it's the founder that is able to like motivate them, inspire them, and then also serve as the editor and the quality bar.
Yeah, it's team. Everything here that's true. Everything is teamwork. We haven't accomplished so much if we hadn't a team that is married with the mission of the company. And I think that's really important part of your journey to find that. I mean, that's one of my most concerns, to keep building the team that we have built, because me, Fernando, and Eder, we have been since the beginning. We have been rejected. We have been stolen. We have been betrayed. But we're here together as a team. Yeah. I mean, if Eder hasn't supported me since the beginning, I wouldn't be here. If Fernando didn't buy my story and he left his MBA and come back here join us, because we know since we were little kids, they bet on everything. We are a family, so build your own family, detect who is valuable at your team, who always takes care of the guy that it's besides you, helps each other. And I know sometimes you have to be tough, but it is what it is, and you need to keep pushing.
Yeah, I mean, I think the founding team is so important, having a lot of trust between founders, and clarity around roles, like ability to resolve conflicts, all of that. But then beyond the founding team, one of the things that Drew and I learned over time is that you're only really able to do as many, the number of things you're able to do well as a company is proportional to how many leaders you truly trust. And so you sort of identify maybe as a company, you can't do like 20 things well. Maybe you can do 3 things well. Maybe when you get bigger, you can do 5 things well. But then if you want to do 5 things really well, like who are the 5 people who are going to feel like it's that, like, it is on them, like they fully own that problem, and you are able to let them run.
Yeah. Same for us.
Yeah. And so I think, I think with, I think we've talked about this with your, expansion in Colombia, just having someone that you truly trust to own it and make it successful.
Yeah. And we got this here with Dani. Where is Dani? I think she's downstairs working. But tell her that
she's amazing.
we'll talk to her about her. But yeah, she took the shirt of Kapital, and a lot of people that I want to appreciate. Mike Farro, he left. Where is Mike? Oh, there he is. He left. He left his company for us, and that means a lot. And when people support you, you need to support them back, and find always the right persons. That's the only thing that I'm going to be able to tell you. That when you know that it doesn't matter that you're there, but they're gonna be there and support you there. And because the journey in a startup, it's hard. It's hard, and you need to be surrounded by the very best. They don't need to be the smartest guys, but they need to be the most committed guys. Those are the ones that are going to help you scale. The guys that kill for your company, it doesn't matter when, what, nothing. They just go, and because they believe in you. And that's the purpose of a startup. That's how you get talent, because they support the idea. Because sometimes I've seen a lot of people that they lose, like they drop their big fancy bank job and they just go to your startup and just go with you all in. But yeah, there's a lot of things to talk about, but tell us a little bit about yourself. So Dropbox, everybody knows it's a success. Then you took it to IPO. Yeah, IPO days, they'd say easy, but I think, as my point of view, they are the hardest days. After the IPO.
Oh, after the IPO.
And then before and after. I saw that who the We Crash, the WeWork series. They mentioned Dropbox. You are at Jamie Dimos' office.
Right.
Yeah, he's there. I texted you, right?
Yeah.
Like, you're in chapter 7.
Yeah.
They just mentioned you on We Crash that JP Morgan took your IPO.
Yeah. I mean, that was, I guess, like, for a lot of entrepreneurs, like, that's maybe like the finish line or the thing that they're most excited about. But I think it's, you don't want, like, you shouldn't be like, it's not right to think about it that way, and I don't think you want your employees to think about it that way either, because things definitely change when you go public. I think when you're private, you have a little bit more freedom to think long term and not have to obsess over all of your metrics on sort of a quarterly basis. But when you go public, there's real expectations from investors, from the street, to hit your numbers, and employees can get really focused on, like, the fluctuation in the stock price. And, like, right now, that's been really tough for growth startups, or companies, whether it's like an Uber or Asana or Airbnb or things like that, where their stock price has gone down anywhere from like 50% to like even 90%.
Yeah, we have seen companies being really hurt.
Just completely decimated.
Yeah.
But anyway, I think for us, it was very exciting. I actually had my parents come to the IPO. We had all our early team there, and it was a very exciting moment.
Yeah. Congrats, man. I appreciate it. I hope we get there one day.
Yeah. Sure
just to give it a quick end, I don't know if you want to say a final words to the Colombian community, and just like some questions that you would like to do to Arash. Arash, I know, so don't ask me. I know.
Thank you.
Don't take it personal. But if you can give some advice on how to play on a startup, and I appreciate your time being here.
Yeah, I mean, I think the most important thing, a couple things. I think one is, there are a lot of entrepreneurs out there tackling problems, and I don't think there isn't a ton of like white space where like you're going to be the only person solving the problems. I think what's most important is that you understand the problem you're solving better than anyone else, and that the solution you're building is a lot better than what's out there. And I think in some cases, like in the case of Dropbox and also Kapital, like I think, identifying opportunities where there are a few different solutions people are using, just like coming up with one simple, elegant solution that solves it all. I think like that is one like winning formula. I think, and I think like beyond, picking the right problem, like understanding it and understanding well, I think it's about having the right team. And for us, we would much rather, have a role be empty, than fill it with someone who isn't the very best. And I think for us, it was obviously people who are very good at their job, but people who are very aligned with our values. People who, for us, it was very important to be clear about the type of employees we wanted. We wanted people who were humble, genuine, thoughtful, bold, and so those were the things that we looked for. And I think for every sort of I think every product, every company, there's the right culture. And I think it's very important to be clear and understand like the type of culture you want to build, and then find people who truly fit that culture. And so I think those were some of the things that that we really cared about, like getting culture right, and having humble people, and building really kind of simple, elegant solutions to problems.
Yeah, I totally agree. On my end, just keep pushing. I think I agree with everything you said. Find the right people, find the right problem. That's also really important. Find the right solution, and think big. Just think big. I mean, if you care about what others think about your idea, if they call you crazy or whatever, don't mind. Follow your own instincts. Follow your ideas. They call me crazy, but what about the Capital House idea, the Capital solution? They actually called me crazy, and that's why no. But that was no. yes, backstage. Yeah. But I mean, we don't need to be comprehended. So don't care about whatever other guys do. Just be yourself. You don't need to get comprehended. Just keep pushing. Find the right people, the people that believe in you, and also you need to bet on people. Bet on them. Make them feel that they're in a safe space. Make them feel better. Appreciate your investors because they're also betting on you. Be as transparent as you can because there are going to be bad times. You need to also be always, guys, I'm going through this. Help me. Ask for help. It doesn't matter. Everybody is going to fail at once. And I think on our case, before we created Kapital, we failed on one of our previous two companies ago. We failed. And I think that's the best thing that ever happened to me. I learned a lot of stuff that I wasn't prepared of. And after that, we built a company, we sold it. And then we're here at Kapital, third journey, back again, from the beginning, doing it all over again. But this time, we're thinking big, we're growing, and we welcome everybody here, and thanks for your time, guys. So if you guys want to ask questions to Arash, please go ahead. ¿Tú, Jorge? Any questions? ¿Algunas preguntas para Arash? Cuéntame, venga. Juaco, he's a really cool founder, by the way.
Nice.
We have a partnership with him. He's a good entrepreneur, and he makes me laugh every time I see him.
Can you hear me?
Don't be scared. Come on, ask people, ask questions.
Hola. Yeah. Can you hear me, Arash?
Yes.
Okay.
Yes.
Amazing. No, I think my question is super simple. It's how much time did it pass before you actually realized of that product market fit? I mean, before those 100,000 requests, because I mean, as entrepreneurs, we were pressed to, yes, we need to grow 30% month over month.
Right.
We need to make 2 million of ARR right from the start, so on and so forth. But we need to be super focused on the product, right? So how long it was before you felt, hey, we are growing organically, this referral stuff is working, so on and so forth?
Honestly, we were kind of an unusual case in that it happened pretty much right away. When we were in Y Combinator, they actually had every startup vote on which startup they thought was most likely to succeed, and everyone said Dropbox because everyone in the group, like, they wanted Dropbox. And so I think we honestly got lucky. I think in most cases you won't get there on the first try. And so I think what's important is having a small set of people who really appreciate what you're doing and figuring out how to find more of them and kind of going from there. I don't know that, and then I think that in this environment, I think I think in the past, just growth at all costs would sort of be acceptable, but I think it's also very important to be, careful about how you're acquiring those users. I think there are a lot of companies who think they have product market fit, but they're really just growing through marketing. And I think it's very important to make sure that that you actually have product market fit, and growing virally is obviously the sort of best way to achieve that.
No, I
Yeah.
agree.
Yeah.
They ask you. No, but
Yeah.
I agree. I totally agree. People get sometimes they think they're in product market fit and they aren't.
Yeah.
They spend a lot of business in billboards. Anyone else who wants to ask a question? ¿Alguna pregunta? Sin pena. ¿Quién? Allá atrás. Sí.
Hi, thank you for being here.
We cannot see you. Yeah, good.
Sorry. Thank you for being here. I have a question regarding talent. You both spoke a lot about talent, how to find the best talent. You always have to focus on the best talent. And I want to ask, in all your career as a boss, as an investor, what's the main traits that you've seen in those people that differentiate the best talent from the rest?
I think for me, and I think every culture is different, but like for us, what was most important was humility. And so we wanted people who were very self-aware, knew what they didn't know, and were just very curious, just like intellectually curious. And I think we prefer to, in a lot of cases, in some cases this was good, in some cases it was bad, but we always like thinking from first principles and trying to solve problems in new and kind of clever ways. And so for us, just having people who are very curious and like I said, humble was kind of the top thing.
I like the humble part. For me, it's a little bit different. I agree on the humble part, but you as a leader, what was your name? Sorry, Carlos. Mucho gusto, Carlos. You are the CEO of a company? Okay. Oh, good. For me, the CEO is the one that needs. I'm a guy that it's with his. I'm a
Instinct guy.
instinct guy. I've been betrayed of my instincts, but 99% is my instinct. But for me, it's the CEO who needs to get the best talent of his people. You need to get the ability to get the best of your people. That's what that's what it is for me. That's why I try to be sometimes I'm hard. Yes, I am. But my people, the ones that have been all the journeys with me, they know that I want to extract the very best from them. And the guys that understand it, they actually become really good at it. Because everybody here is talented. You need to find your passion, and it doesn't matter what you do, just do your very best. So yeah, that's a tough question because there are mercenaries around there. Yeah. And but I think you always need to find the best of the people, the very best, and make them. If they're good at something, just tell them you're not good at this. Like for my case, Fernando is really good at Excel. He dominates Excel. He's doing Excel all the time with Jeff from around down there. Those guys, they dream about Excel.
Yeah. Passionate about their craft.
And I'm passionate about product.
Yeah.
And
so you want.
being with but no, Jeff was telling me that he got a nightmare that he was typing with Fernando Excel. I mean, they dream about it. True story, eh? That's a true story. So we wake up at 7 a.m. and I see this message with guys. I was just doing Excel, dreaming with Fernando. I was like, I will kill myself. But that's their time. They're good at it. So put the very best on what they are good at. Yeah. But who else wants to ask a question? I saw one in the. Oh.
We're talking about the team. How can we build the better team, and which skills we need to find in them?
Yeah,
I'm in product, by the way.
In product?
Product, yeah. In Kapital.
Yeah,
product.
Okay, yeah. I mean, I think there's like, in our case, there were just a set of things we looked for all employees, but then I think there's definitely traits, specific to roles. And so I think, one of the things that we always tried to do was we asked our investors to introduce us to the very best people in a particular role. So like, who are the best product people And so we would meet people, not even to recruit them, just like the best product people, just to get a sense for what great looks like. I feel like with product, it is kind of a similar role as CEO in the sense that you need really great instincts because you're getting all sorts of like conflicting data. You're looking at metrics, you're getting one story from the metrics, you're talking to customers, that paints another story, and then people are telling you what they want, but really they're kind of describing a solution. What you really need to do as a product person is understand, okay, like what is the problem that the user is trying to solve, and can we come up with even a better solution than they're describing? And so I think with product, you honestly need people who just have great judgment. So you're looking for judgment in a world with a lot of ambiguity, with conflicting data. The best product people are able to kind of synthesize it all and then come up with a great solution. And so I think the way you test that, I mean, you can obviously ask for questions, but I think like more important than that is you want people who built great products, right? So if you're looking for product people, it's like, what have you built? Like how many people have used it? And then I think you really want to hone in on judgment.
Totally. I'm not going to answer to the head of product that question of my team.
Yeah.
So that's your part. No, yeah. I agree 100% with what these guys are saying. As you build an amazing product that everybody uses. Everybody here has used it at least once, Dropbox. But learn from the very best. Last two questions. You had one, yeah? What's your name? Nico, mucho gusto.
Hola, hola. Yeah. Hola, Nico. If hypothetically, if you have to redo or restart, like create a business right now in this industry, what would you like to do? In which industry? What problem do you want to solve?
Ooh, good question. I think so. I think one thing I didn't really touch on, but I mean, I think we talked about how like hard entrepreneurship is and how it's a roller coaster. I think through that process, like I definitely neglected my health. So like I didn't eat well, I didn't sleep very much, didn't exercise, and I think that
you run fast.
Yeah, well now I do. So so it's been a couple years since I've had a full-time job, and so I've been able to like prioritize those things. And so in retrospect, just like I would have personally like invested a lot more in my health, because it's counterintuitive, but I think yes, you want to run hard and work hard, and you can become very obsessed with the problem you're solving. But I think if you don't take care of yourself, you're actually going to be less effective. It's counterintuitive, but the more time you spend, exercising, eating better, like I think that will pay off as an entrepreneur. And so to me, I actually think this is something that a lot of people struggle with. And so I think just bringing awareness to people about their health. So a lot of like wearables, things like that, to me are interesting. So there's rings, like Oura has this ring that does sleep tracking. Yeah. You have Whoop, and then you have these like blood sugar monitors. I think all these things that just like give people the data and the insights to make better decisions about their health. Like to me, that's like a very exciting space.
But I think he doesn't want to get a start again.
I think I'm good for a while.
He's good.
I like helping people like Renee. Yeah.
Well, thank you for
that.
It's like,
yeah.
We're just starting, so so I can answer that question. I have redo it 3 times. One bad, one successfully. We went all in. Literally, I invested all my money into this company. I could be retired and do something stuff, but I went all in. And Fernando the same, Eder the same, and that's what we did. I can redo it again. But the thing he's saying is really important, because you need to keep balance. On my side, everybody knows that I always spend time with my kids, and it's really important for me. So I always try to. I know we have sometimes just a lot of work, but I try to spend a lot of time with my kids, with my friends. Sometimes I don't go out because I had a lot of work, but I need to spend more time, and I'm really committed to my routine. I didn't want to take an interview today in the morning because it was messing with my routine time at the gym. Yeah. I didn't want to take, but I had to take it. But because that's my me time. It's my me time. You need me time to focus on what you need to do. Find always just something to. It's your time. Go to a therapy. Go to talk to whoever. Don't do weed and crazy stuff. And do it. No, just kidding. No. Find time for yourself. Whatever passionate about it, just do it. It really helps you to find track on what's wrong in your company. That's when I see something that is not going correctly, I just push back and go by myself and see what's going on. Because sometimes you're really overwhelmed about the product and the expansion. Colombia, people, Peru, Mexico, Capital House.
It's hard to think clearly.
It's hard,
when you're not taking care of
sometimes I
yourself.
feel like I'm getting lost. But I have a lot of stuff to do, so that's why I just go back to myself. I'm a gamer. I'm a huge gamer. I play Call of Duty all the time and God of War and Zelda, and yeah, I'm a geek. Sorry guys, I'm a gamer. Everybody knows that. And FIFA, I beat everybody on FIFA, so welcome everybody for the FIFA. Yeah, we're gonna put one FIFA here, and we're gonna do FIFA tournaments, Call of Duty too. But always find something that side of work, and then reboot back again. So last question, guys, because we need to go boosting and cruising. Yeah. What's your name? Juan. Mucho gusto, Juanca. Bienvenido a Capital House.
So, first off, thank you for being here. And if that's the type of company that you would like to be talking with, I will be happy to tell you about what we are doing with Eleva, because that's exactly what we're doing. But we can speak later. But on the other hand, I would like to ask you about if you see there's a specific mistake that early stage entrepreneurs are making, like anything that you can see common mistakes across entrepreneurs that stopped you from getting to where they want.
Mm-hmm. Let's see, common mistakes. I mean, I think I mentioned this earlier, but I think in a lot of cases the solutions people will build are not different enough from what exists. So I think it's really important to understand how you're different from what's out there. And no, you don't want to obsess over competition, but I think it's more about having clarity about what is different, because you're going to have to answer that question to a lot of people. When you market your startup on your landing page, you're going to have to be clear about what it is that you do and what problem you're solving for people. When you're talking to investors, it's the same thing. They're going to do research on your space and look into kind of similar products. And so I think that clarity around what it is that makes you different and what makes you you're different, and what makes you defensible in the long run, because I think that's another question that investors will have, that you need to have conviction in, is what's going to happen when someone tries to copy what you do. What is truly going to be sort of the moat that differentiates you in the long run. So I think those things are really important. I mean, I think, and then I think maybe more specific to this environment, I think this is definitely an environment that is going to prioritize companies that are pursuing markets that have like a business model that is more sound fundamentally. And so whether it's about, I think consumer startups in crypto, I think those startups are going to struggle a little bit more, more certainly than startups that are building for businesses, or startups that have a very clear sort of path
Yeah.
from a sort of revenue and profitability standpoint.
I totally agree. One more question, you? Yes. No, yeah. I like women entrepreneurs. I always like my team is women. Yeah.
Which do you think that are the key actions you need to scale the culture in your company as you grow?
Sorry, scale what?
The culture in your company as you
grow.
Culture. You start growing, you need to scale this.
Yeah, so I think there are a couple of things. I mean, one is really making sure, like, having clarity around what your culture is. And so in the case of Dropbox, like, we defined 5 company values, and we involved the entire company in that process of figuring out, like, what are those, like, 5 words that really describe our culture, and then making sure you're looking for those things in the interview process. And actually, for the first, I think, 200 people we hired, I interviewed, I think, close to 95% of those people. So it's very exhausting, because I'm an introvert, and so I can only spend so many times.
You
like,
are?
Yeah.
Oh.
You're not.
No.
But yeah.
I'm not. He got me. Like, he came here.
Yeah, no, definitely don't do this sort of thing too often. But I mean, for me, it definitely like it went from interviewing like 1 or 2 people a day to like 5 or 6. To even more, and that was exhausting for me, but it was so important because to me, culture at that point was very intuitive. It wasn't all sort of written out, and there were things I was looking for. I was looking for, similar to what Renee was saying, I was looking for humility, but I was also looking for passion. I was looking for that total obsession over the craft, like Fernando and his irrational love for Excel.
You have to see
that's what you want. That's what you want to see, and so you want people who just like jump off the page, right? And so for me, it was really important to meet people. And then I think beyond that, it's you have to lead by example. So you can have a set of values, but then if the CEOs or if the VPs or if the senior people, if those people are not living by the same rules, if you're saying these things are important, but you're not leading that way, like then you don't have a culture. And so I think you really need to be careful as a leader to sort of follow the rules that you're setting, follow the norms that you're kind of defining.
Totally agree. I want to appreciate everybody that was here. I appreciate Arash, your long trip. On behalf of Eder, Fernando, and the complete Kapital family, we thank you. We welcome you to Kapital House. We're gonna cut the ribbon. We're in special guest, and we appreciate you being time here. Muchas gracias a todos los que vinieron aquí. De verdad les agradecemos mucho. Esta es su casa. Gracias. Thank you. I'm a long way, but thank you, everybody. Kapital House. Please welcome everybody here, and all our friends, guests, partnership, alliances. We are really grateful on how you have received us in your country. When Mexico loses in the World Cup, we always go with Colombia, but you guys weren't there, so sorry. No, me and Eder, we went to a game. Tell them. When Mexico lost with Brazil in the last World Cup, Eder was like, no, let's go with the Colombian guys. We didn't even know that time that we were going to be in Colombia, but we went there. We were on the goal keep that was on the penalties. But I was with this is what I see, and this is true. The Colombian entrepreneurship, they're passionate about what they do. That's what I can say about you guys. I admire you even more than in Mexico, and it hurts me, but it is what it is. And so keep it that way. It doesn't matter the economic, the political environment you're in. Never stop. Just keep your idea. And thank you for receiving us. And like I still remember in the game that Colombia lost against England 4 years ago, there was in front of me one guy, because the second goal they tied at the end, the guy that came in and do a header, right? Yes, Mina. Yeah, I remember. He was calling his family with a baby in front of me. He was calling his family here in Colombia. That's the Colombian. Thank you, everybody. We love you, and welcome home. Yeah, we're going boozing and cruising. We're going to be drinks and enjoy.